This conference will now be recorded.
Let's make it happen.
Good evening, ladies and gentlemen. This is Clueless A Trading Frank. It's approximately 8:33 p.m. on September 9th, 2020. Welcome. This is our midweek Wednesday midweek strategic market and stock update webinars that we do. Session will be recorded and will be uploaded to the Clueless A Trading YouTube channel, which has been delayed for the last couple of webinars, which I really have to get it done. There were some technical issues earlier. However, for anyone who cannot be present here or want to re-listen to these webinars, these very educational and strategic webinars, the GoToMeeting link is posted within 20 to 30 minutes after the session ends directly on the real-time Twitter feed. So you can just click that and just listen to it. Or anyone out there, who's going to listen to it later, that's the place to go. So don't wait around for the YouTube upload, which has been slightly delayed for the past couple of webinars. Just click the GoToMeeting link and listen to it. Anyway, welcome. Full disclosure, this is purely for financial education, not for any solicitation or advice. And let's get straight down to the business of trading. I hope everyone's connected and can listen to me. Feel free to ask questions along the way, but we'll certainly have the member Q&A as we always do. So the key is what you saw over the last 3 days, last 3 trading days, I should say, was the fastest 10% plus correction on the Nasdaq and one of the fastest corrections on the S&P 500 and the overall market in recent memory. Now, there's a reason behind it. And some of you might have read about it. I can't remember if I did post that particular article. There's a lot of stuff going on here, and I think I missed posting that particular article. There was one huge factor that caused this ferocious move from the highs that some of these stocks were printing, as you all know. And there was one major reason, and there's also a secondary reason. I'll explain to you guys both. So the biggest reason behind it was, I'm sure some of you have heard it on the news or read it, on CNBC or wherever, all the resources that's out there, was SoftBank. Are you guys familiar with SoftBank or heard the term? I've heard the name.
Yes.
Okay. SoftBank. No. Okay, no problem. SoftBank is run by one of the richest men in the world, Masayoshi Son, who has funded some of the biggest tech companies in the world. Okay, his biggest failure, which is one of his rare failures, but it certainly was what's that company? It's missing my mind. The ones that rent out office space, like community office.
WeWork.
WeWork. Thank you so much. It's been a long week, so yeah, WeWork. So WeWork was actually his biggest loss. Anyway, SoftBank is basically a venture capital VC firm. They fund companies from startup, and they make billions and billions of dollars. That's how he became such a multi-billionaire. And they hold it for the longer term, all that kind of stuff. A lot of names he's funded around the world and here. So to make a long story short, SoftBank also has a derivatives arm which is involved with trading. And that's run by a gentleman who comes from Goldman Sachs. So he understands the dynamics of derivatives. And what are derivatives? Well, they're complex derivatives and they're options. Okay? And basically, they went hog wild buying call options on every single hot stock that we made money on. Now, we're just piggybacking them. And that's the reason why I mentioned to all of you quite a few times that I don't like it when a stock gaps open $15 every single day, because it's just tough to catch a galloping horse. You need the horse to slow down so you can get on it. And that's the stage we're in right now. And that's why I told people to bulk up yesterday, or at least take selective positions, which paid up very nicely today. So to make a long story short, SoftBank went hog wild. They bought supposedly $4+ billion worth of options, which controlled more than $40 billion worth of stocks that were the hottest stocks in the market, primarily on the technology side. So this was brought out it was revealed at some source. I can't remember which paper revealed that. And supposedly, they pushed the market, and I mentioned this quite a few times, the market was getting severely overbought. So this washout was going to happen. I mean, I didn't expect it to happen like in 3 days, but hey, that's just the way it happens. And the reason it happened like that, because SoftBank had to unravel their positions, get out of them, and take their profits and whatever, I'm sure they had some losses too because things were falling fast. But let's say they were taking their profits. Okay? So you can imagine their $4 billion, maybe it's worth now 10 billion, 8 billion. So if you're taking $8 billion worth of profits, you're going to see that type of drop where stocks are just falling over the cliff, 20 bucks, 30 bucks, Apple down 17, 18, Tesla's like, down like 100, 120. I'm talking in one day. So that's what happened. The secondary part is that there is an element of froth and excitement in the market. There's nothing wrong with it. But there's also an element of, I would say, inexperienced traders just gambling. There's a lot of people, they were never in the market when the markets were crashing on March 23rd. But now they're getting kind of excited because they see these stocks like moving up, like, wow, it's easy money. Well, nothing's easy. You guys all know that. If options trading was that easy, everybody and their grandmothers would be doing it. Well, in China and Japan, grandmothers actually play options. But the fact is, you're going to lose money real fast if you don't know what you're doing. And even if you know what you're doing, you're still going to lose some money because the market is extremely volatile. And that came from the Robinhood traders. There's a lot of Robinhood traders, who just put in money and then boom, it went up and they're like, yeah, I'm a hero. Look, in a bull market, there's an old saying in the business. And please, I want you guys to all understand that because all of you are new. Some of you are really new. Options trading is really risky business. I mean, really risky business. All right. So that's the reason why I rely, and I've lost money. I've lost money years ago. I still lose money here and there, but my net gains are obviously higher than my losses. But the point is, and no fault of mine, mind you. So this is not a blame game, but keep in mind that if you're diving into something without a technical GPS or a technical roadmap in front of you, and without understanding some of the dynamics behind it, whether or not the probability is higher that it's going to go up over the next couple of days or so, then you are basically just pure gambling. Look, options is quantified gambling. What does it mean? It means that when you're sitting in Vegas or in Atlantic City or wherever you're sitting in, in a casino, you have no idea what cards are going to come. I don't care how many times you count cards or how good you are. The fact is, it's a real game of chance. And the house wins more than 80% of the time. Correct? They keep 80% of the money and they pay 20% of the winnings to the winners. That's the standard rule. So it's not quantified. Here, it's quantified. In other words, that you have the house, which is the big players, the Goldman Sachs of the world and the big investment banks. A lot of the times they're on your side, even though a lot of the times they're creating volatility to take money away. I mean, make you sell positions and at the wrong time, lose money, and then you see the same thing run up. Case in point between yesterday and today. And not just yesterday. Yesterday was Tuesday, even from last Friday. So the key is that just be careful. And that's the reason if you don't have a GPS roadmap in front of you, these type of constructed charts, I'm going to go through that, right now. It's not that hard, as you know, you have to put in a little bit of learning. That's just like any other business if you want to be good at it. So if you don't have if you don't have the GPS roadmaps in front of you, the road is going to be very, very difficult. I'm letting you know right now, going forward between now till the end of the year. The easy money, in my opinion, the easy money is when nobody steps into the market, which was March, end of March, the COVID-19 drop. And let me just reference the charts, is done. All right, I'm just letting you guys know, is done. Now you got to be a lot more careful, and you just can't randomly go in there and say, oh, I'm just buying this and it's just going to go higher. No, it's not. Because this element of the SoftBank situation is really worrisome. Because if these guys are going that crazy over trading simple simple call options, and we don't know when exactly they're going to start selling. My charts said markets were overbought and this and that, but the ferocity of the move, these type of things are hard to gather. Yes, we did some SPY puts intraday, and those went up, some cases 300%. The best case was 2,000%. But there was no telling. I was going to the small hedges that I bought yesterday, and yesterday was Tuesday, yeah, and Friday, small amounts, just as a hedge, just in case we drop. Didn't work out, which is a good thing because all my longs positions, which are the call options, they worked out. So I like keeping a hedge because I believe that that's that just in case, because the markets actually went down lower. These are the E-mini futures, so you can see what's happening after the market. This is what's happening. Futures are actually up about 15. Right now they're down about 3. You can see that red candle here, right there. That's a live candle. It's probably going to come down here. We could be down 15, 20 handles while we're doing this session. So basically, those the levels, like for example, as suggested. Remember, these are all suggestions. The final decision is always yours. And to buy the 330 strikes on the puts expiring September 11, didn't work out. Fine. What about the SPY calls, the 350 calls, which were dirt cheap? They went from 20 cents, what 20 cents? 18 cents. They went to 42 cents. Yeah, 18 cents to 41 cents. You could have caught it in the middle, made yourself anywhere from 50 to 100% on a small amount of money. And then and then I also had the 345 calls. We didn't get to the SPY didn't get to 350. It went to 342, but the calls still went up 120%. So it doesn't have to get there. It just has to move in that direction. The implied volatility, the gamma, will take you there, and the price will increase. And these were dirt cheap. These were what we call extreme lottos. Anyway, so I just want to my job, as you know, I'm a bit of an educator when it comes to the markets. I want people to, take control of the wheel and drive their own car, because that's the only way, you survive in this business. So my personal thought is that we will hit some levels here, which higher, and they're clearly identified, marked here. So you got a couple of 100 points to go. But then we come into the mid-September routine, and what happens in mid-September? It always has a pullback or major volatility. Will it be different this time? I don't know. It could be certainly different. But that's the general pattern that happens. Mid-September, the 15th of September is what? It's actually Apple's event, 15th of September, which is next Tuesday. Wow. So give or take, that's that big Apple event. They're going to introduce their new iPhones, iWatch, and all kinds of good stuff. I'm long Apple. If Apple runs up higher tomorrow, which it looks like it is going to, it's up about $2 after hours. And I am going to be scaling out profits. So that's the next point I want to bring to you all. Don't believe what you see. Okay, don't believe what you see. The charts are all fine and good, but the world doesn't just run on technical charts. The world runs on the SoftBanks of the world, unloading $8-10 billion worth of, selling call options. The world runs on political stuff. World runs on President Trump going, saying they're going to completely decouple from China. That was another reason, he says a lot of things, but it doesn't really, trade talks are still going on and stuff. But anyway, that was a pretty broad statement. What decoupling we want? Like do no business with China? Good. Get ready for a 10,000 point fall on the U.S. stock markets. Okay, because a significant amount of our companies make a crap load of money, billions of dollars, and I'm not just mentioning Starbucks, but technology companies, everything from China as well as the Asian region. So all of a sudden it's okay, no business with you guys yet. See you later. Okay, I'll be short for weeks in a row. Anyway, that's not the point. So these are all the different risks that are playing in the market right now. The third thing is, valuation. Things were getting a little too nutty. When a stock moves 30, 40, 50 points, and we've played some of them, we've played a bunch of them. It means that, and that's part of the reason, those big boys are coming in, the SoftBank type of people are coming in, and they're buying like maybe 1,000 calls, boom. So obviously they're moving up, and we're just like, yeah. So when we start saying, yeah, well, this is what happens. All right. So just want you guys to be careful. That's why I said on the Twitter feed that don't take oversized position. But if things get, if the time to take positions, to be honest with you, like powerful, like getting aggressive, is these levels that I show on the charts. The time to get really aggressive is not here. You still have positions because we are going to hit, it's a very high probability we're going to hit the blue line here, the Fibonacci 50, 3442, which is roughly 3442. Yeah, which is roughly about 320 to 350 points on the Dow. There is a very high probability because that's what happens. The Fib 50 acts as a magnet. So when you're looking at my charts, and not just, you don't have to just rely on my charts, you can draw these yourself. And of course, if you need help, ask me. We do the training sessions and then sign up for the advanced coaching sessions, all kinds of good stuff. But if you want to quickly say, hey, but you have to know how to draw your own charts. You have to. Yeah. Otherwise, or just like I said, screenshot these charts. But you have to have the dynamic chart, which is moving, not just a screenshot, right? So you have to know. So basically, as it's approaching this level, you will notice that this is a supply zone. There's supply of stock to be sold. So in other words, that's resistance. It's real simple. So as a trader, I am looking at this. I am sharing it with you guys as often as possible during the day. And then I'm also looking at the stocks that I'm trading because I know right at this level, maybe it overshoots. And I think it will overshoot. But I don't think it's going to be in a straight line. It's going to overshoot to 34.85. Now, 34.85 is roughly about, from here, it's almost 100 S&P handles higher. So that's roughly about 700 to 800 points on the Dow. I don't think it's going to happen in one day. Hey, it can. It's happened before, but it's a low probability event. The other factor that kind of hit the markets also was AstraZeneca. One of their patients got really ill on the AstraZeneca Oxford University vaccine. And as you know, President Trump administration also gave him $1 billion. So AstraZeneca, this news came out and stock was down 8%. That obviously hit the market like, oh my God, the best performing or the best chance for a COVID vaccine, which is the AstraZeneca Oxford University collaboration. Boy, that they halted the trials. Now everybody's just going to just like, oh my God. That was also another reason behind this sell-off, just so you know, over the past couple of days. But AstraZeneca came out today, we bought the calls, and they said, listen, we're going to look into this. Just, it's a standard thing. It's not the end of the world. And they're looking to restart the trial next week, which is fantastic. One patient out of 99 is not the end of the world. What they didn't say, what would be dangerous if they said, that's it, we're done with the trials, we're not going to pursue the COVID-19 vaccine research. That would send a ripple effect, negative ripple effect across the markets. And as you know, all the other stocks which are in the business of developing COVID-19 vaccines and therapeutics and stuff also fell on Tuesday and Friday. So now you know. So let's get on with it. So basically, we got a couple of 100 points under the belt. Now, in the meantime, the market's going to drive you nuts. It drives me nuts. So sometimes it's best to not, and it's hard to do, not to look at your intraday. And I mentioned this on a Twitter broadcast, which I'm sure most of you, I did that yesterday. Most of you listened to. Just quick, like a minute long, but those are helpful. I'm just sharing my thoughts. A lot of the times, from a psychological standpoint, it's best not to look at your intraday profit and loss number on your screen. Some people could be down a couple of hundred, some people could be down a couple of $1,000 just because the market is being volatile. Not a crash, just volatile. You know, Disney could be up $3, all of a sudden, it's flat. It means nothing. It means nothing whether the stock's going to be up 2 days or 3 days from now. I'm long Disney, as you know. And or like a Walmart, which is doing fantastic, and then all of a sudden, end of the day, like a sniper missile, CNBC comes out and says, "Oh, the U.S. government is actually talking to TikTok, and they probably won't have to do a sale of their American units." So Walmart falls $2 in like 3 minutes. Nothing I can do. After hours, it's already up $1 and change, because Walmart is running with Microsoft to buy TikTok, well, the U.S. operations. So if the U.S. government is going to work out with TikTok, which actually is kind of, you know, interesting and I think constructive for technology, then Walmart and Microsoft don't need to buy them. In the long run, it really means nothing for Walmart. Like, okay, if they got TikTok, they got TikTok. Like, how many TikTok kids are going to go to Walmart? But hey, at least they got a social platform, right? So anyway, so those type of things happen a lot. So let's get into a couple of charts and just, you know, technical predictions. So far, I've been, you know, pretty good at these forecasts and stuff. Let's see if it works this time. This was the huge drop since the third. Third was Friday, right? What day did this crash start? Yeah, Thursday. So Thursday, Thursday 4 a.m. Thursday it started. It's also a 3-day rule. It has to do with margin calls and stuff. And so Friday, Tuesday, Wednesday. Friday, Tuesday, Wednesday. So today was the third day, right? So it's and we rallied. So it kind of makes sense, because most of the margin calls that are generated when you have these flash crashes, the margin clerks have already sold those positions, so they're pretty much, you know.
Today was the fourth day, Frank. So 3 days of sell-off, and then today was the bounce.
Today was the bounce. Yeah, fourth day. I apologize. Sorry, Paul. So basically, the margin clerks have squared away the books. So now, you know, the money can enter. All right. So saying all that, your Fib retracement here, and this is the level which, if we 34.85, this is the 700 to 800 points from where we are right now, or 700 points, let's say. And realistically speaking, if we do manage to break out here, I can assure you that we are going to go hit 35.40, which is the downtrend line right there. We have broken through the downtrend line here, the red line. So that's a big positive. Now we're kind of, you know, pissing around after hours with the futures. Futures are down about 3.5. They were up about 15. They were up here. So what we would like to see is the futures do all this kind of dancing around during the night from the Asian markets, from the European markets. And then by the morning, we would like to see it get up here. And you can, like I said, there will be some selling here. So if the futures, let's say, open up 15, 20 points, 20, 25 points handles, what is the first thing a tactical trader does? He slices down his profits. He takes it, he grabs it, because he knows we are at a major resistance. And this is what a tactical trader does. A long-term trader can do whatever they want. But I'm just telling you, when you get a move of 60, 70%, you know, on a gap open, well, I take my profits, because at that point I can move my strikes higher, pay lesser money for buying cheaper calls going out, but at least I know my money's in the bag, and I can basically, you know, from a mental standpoint, it feels good. So you're ready to attack the day with cash in there on the side, and you're ready to go. It's all up to you guys how you do it. All right, that's the way I do it. So the key is that if we open up here, good. I take it, like I said, sell full or partial profits, whatever you want to do. That's my lingo for saying take the money down. Then if it doesn't, let's say, for example, we open down all the way here, which is a possibility, believe me. So we open down 50. We open down 50 handles lower. Somebody says, no, that's not possible. Well, I don't know. You probably, don't live in this market, right? This market can do anything, anything. There could be some news coming out left field at 3 in the morning while you're sleeping, and futures could be down 50 points. Or at 8 o'clock in the morning, futures could be down 40 points. So if it opens down here, what do? I'm a buyer. Because this pattern that you're looking at is definitively, let's go back here. There was your falling wedge that I drew. It went pretty much exactly, it hit that level, give or take a few points. So this is clearly showing to be, from a technical standpoint, let's say we open down here. Perfect. That's an inverse head and shoulder. That's a very powerful bullish pattern. Head, left shoulder, right shoulder. Neckline. The neckline just happens to be the 50. That's why I'm saying if we break through that neckline, we're going to make a fast run towards 34.85. At that point, it's exact pattern symmetry. Watch. At that point, there will be a pullback. These are projected moves. No guarantees, but most of the time, it's the way it happens. Then profit takers will come in, like us, will sell. It'll come down here and then make a move straight up like that. Look how similar. Exactly. It's a mirror image. Watch. Let's say this is the mirror. This is the left side of the mirror. This is the right side of the mirror. This move, given things go positively, there's some positive catalyst in the market and such, will happen. And that'll be this move here.
Hey, Frank?
1 second, let me finish my thought. And
Sure.
then basically it's these things I've noticed over and over in years, and they happen to be very, very structural. In other words, they are literally like every action has an equal and opposite reaction. So I believe that the ferocity of the drop, for reasons that I explained earlier on, this pattern will overall be created in the same image as this. So in other words, it'll be just just like this. This move will recover, but that's a low probability at this point, unless we see what happens over the next 2 days. But just putting it through. Paul, go ahead. What's your question?
Yeah, just more of a game theory question. Obviously, you talked numerous times about all the cash on the sidelines, like almost $5 trillion in cash. There's also bond money, which is getting very poor yields. Do you think the swift correction that we had is going to entice some of that money to come back, or
No.
what would it take?
No. And the reason it's not going to entice them to come back, because that money is sitting on the sidelines primarily from institutions. That money is pension fund money. That is, and mom and pop certainly, with all this volatility in the market, they're just like shit scared. Okay. Now, and the other thing that these guys won't do is given the fact that we're going into a pretty turbulent period in the latter part of September, and October is always turbulent. The first part. October is always turbulent, first part. Remember the famous crash in 1987, October. Every October, there's this massive, it's the end of the fiscal year for mutual funds and some institutional funds. And so there's always a lot of rejiggling. So I feel that given and of course, all this heated talk about the election and things that might happen, that money, in my opinion, is probably not going to enter the market at this stage. Like I'm talking the next month or so. So that's my opinion.
And on the flip side, again, Frank, the
Go
market tends to go up when there's that fear as well too. That's how we got here in the first place, right? So it could be bullish.
Absolutely, and that's the reason why with a lot of our new traders and stuff. Who is Ozan? Ozan? Ozan,
Frank,
can you hear us?
Frank, he's a referral from me, Lucky's Mini. I told him to join us.
Oh, please. Okay, welcome. All right, great. Just saw the name, Okay, sounds good. All right, so that's because we have a lot of new people in our group, and I'm just trying kind of not water it down, but I'm just trying to share some of my experience with, I've gone through enough crashes and enough reflex bounces over the years, and especially the ones which are the recent ones, which are just, like I said, fast and furious, right? Because they're so automated. It's instantaneous, which I love. You want instantaneous washouts, technical resets, things going from severe overbought to severe oversold immediately. We're going to look at that tonight too. If you remember the last webinar, we looked at the New York Stock Exchange McLaren Oscillator, looked at it again, and it pretty much got really oversold yesterday. And then we had this bounce. These are standard procedure. What's going on? The difference is that there are some other players in the market right now, like the SoftBank type of situation, which is skewing things a little bit. And then and the fact that we are in a very heated political situation right now, with elections coming. So there are some other factors that have to be taken into control. Into consideration. So just wanted to, so looking at this chart, for example, if you remember, we were trading this chart very, very effectively and following that big bounce. And this goes back all the way to August, right? So you had that big drop in the market. Okay, look at this. We call this a big drop. That's what you call a freaking big drop. And then all these different patterns, and then the uptrend channels intact and all that stuff. On the short-term basis, for tactical traders who are looking to make money in the short term, the uptrend channels are broken. Obviously, you can see that, right? On a short, intermediate term basis. We're going to look at the longer term charts in a second. So as you can clearly see here, now we got all these different resistances, even though the resistance should be in green. But anyway, there were supports before. Now they become resistances, as you know. A support, when it breaks down, it becomes a resistance. So bottom line is 3480, 3500, give or take, is what I'm looking for, which would be the most optimistic bullish scenario for this week. Ending on Friday, September 11th. And generally, like I said, historically speaking, for September 11th, the markets don't generally crash day or two before September 11th. We did our crash business, right, from last week. So hopefully that's the case again. So as you can clearly see here, severe volatility, a lot of chop. So that's why I'm saying keep a very close eye on your profits, even though if you can miss out, in this cases, even myself included, I even said that. We missed out on things which we were taking like 120%, and then they were going up like 250%. You remember that? See, that's what happens on these high-powered fuel, runaway uptrending bull markets on a short term, okay? But now it's a slightly different story. So now what I'm saying is, if you take in 40%, for example, on your option calls, you're probably not going to miss out on the next 100%. Okay, that's what I'm trying to say. But if you follow the charts and if you really see a severe breakout, let's say over 3480, then this comes into play, which would be like literally like an 800-point up day. As a bullish, as you know, as somebody who's a bullish trader, I do expect the 800-point up day. We were up how much today? 600. Almost 600 and change, right? I can't remember, but we were up 28,206. Yeah, we were up like 600 and change. We ended the day at 439 because we hit. So we were all the way up here by 3 o'clock, and then we kind of pulled back a little bit. But this is fine. This is actually a cup and handle. You guys all see that? These are things that are generated by investing.com. It's kind of interesting. What did it say here? Morningstar, bullish. All right, great. What did you see there? This one. Engulfing bearish reversal. That's this candle at 3 p.m. This one. There were 200 million there was an imbalance in the market, 200 million to buy, and at 3 o'clock that switched to 200 million to sell. So that's the reason I just read that. That's the reason why we had this thing here. But these are very short-term moves. It really doesn't matter. I mean, it matters if you're a trader, but I'm just saying. Let's move on to slightly longer-term chart. Now, this one I like a lot more because here we are seeing a wide-angle view, and these are the ones that Paul trades off very well. So what do we see here? If you look at it, this is the pattern. Watch. Because identifying previous patterns is it's actually very effective in making money. So if you look at it, I consider this pattern that's being played out here, that got played out in the months of June and July, is pretty much what's going to happen here. So what does that mean? That means here's the big drop, big crash on June 11th, somewhere around there. 1, 2, 3, 4, 5, 6. Short rally, double retest. Methinks, all right? That's the same thing that's going to happen. We're going to move up somewhere in that 3,500 zone. Bang, we're going to come down around that period, middle of the month, September. Maybe it's Apple's event. The machines like to play a lot of games. Maybe, if Apple runs up into the event, I'm taking down a bunch of my calls and then maybe leave a very small amount, or even buy a put, because if they run the stock up, let's say to 125, which are the calls that we bought, okay? They run the stock up to 125 or even 130. What was Apple's high? Apple's high was 137.98, the same number that I showed you guys weeks ago, and it hit exactly there. So anyway, so if Apple runs up to 130, I can assure you, on their right on the day of their event, which is September 15th, they're going to drop it 5-6 points for no reason, just for the heck of it. They do that, and then they'll run it up again, depending on what Apple has to say. And whatever Apple's going to say is going to be good. There's no question about it. So I think this is the pattern that's going to get played out. So over the next 2 or 3 days, I'm bullish from a trading standpoint. Okay, so run it up, make the money, get out of the way. You don't always have to short, or you can buy some cheap SPY puts, because if we get another one of these, sharp drops, I don't think that's going to happen. Not this type of 1,000-point type of drop. But let's say you got a 400-point type of drop. Yeah, you make yourself about 60%. If you notice what happened here, we ran up. Then when we ran down, there were actually 2 bullish candles, even though it was lower. Green candles. It wasn't a move like this. So it'll be a more structured move. So let's say we go up another 400 to 600 points, then we get a little structured move down. This was your ascending triangle. We are holding it, this big green line. Remember ascending triangles like that? Boom. Showed you guys that, and this is what happened. So now, and then we'll see what happens after that. If this pattern replicates, then we get a serious run up back towards the highs. And why shouldn't we? Why shouldn't we? But these are difficult things to project because there's so many factors involved, but I'm just giving you a rough idea. Any quick questions, please, especially from the new people? Who's Big Merc? I love that handle. Who's Big Merc?
Matthew Merkins.
Oh yeah, how you doing, man? I like that. I like that. Any quick questions, guys, on this? On this picture? No? All right, let me try to move this a bit. That's better. It's out of the picture. All right, let's move on. Now let's take a look at the Qs, the Nasdaq 100. Why not? Because that's where the damage really happened, like real damage, right? And that's the one that bounced the hardest. So the Nasdaq 100, if you notice on my last webinar, I told you that this line was still pointing down. So even though we were, they were trying to, I said, it looks like we'll have a follow through towards the bottom and towards the bottom of the Bollinger. And that's exactly what happened. If you notice, look, the follow through basically in 3 days. And this is a very bullish pattern, by the way. That's an inverted hammer, and that's a doji hammer, a doji, almost a hammer, doji candle. When you get an inverted hammer, you're supposed to go all the way down here, like the hammer's falling, right? That was a bullish hammer the day before. Remember, Apple was down and they almost went flat. That was very bullish. And then this happened, for the reasons that I explained at the beginning of the webinar. And this happened yesterday. After being, this was bullish. That's where you go long. And then bang. And this happened on Tuesday. This is today. This is the only thing that you guys need to know. Let's keep this simple, stupid, the KISS principle. All right? As long as the stochastics keep on crossing over, and it's certainly attempting to do that, and this is on the daily. So this is more for swing traders. This is actually really powerful. This is not looking at the 15-minute monkey on a hot tin roof candles going up and down and driving traders nuts. This is telling us you can hold long and strong as long as the stows climb higher. It's really as simple as that. Now, this is a daily. Of course, if you look at an hourly, it's going to be more choppy. Technical resets, short-term overbought, this and that. This is, if this line keeps on crossing over, it simply means you can buy the power stocks that move with the market, like the Apples, the Nvidia, which was up a gazillion point. I wish I was long Nvidia, from Tuesday, and the AMDs and the Square, which I'm very bullish on, and then other stocks too, the Walmarts, the Disneys. As long as the stows cross over and keep on continuing. Now, well, these are the cues, so we're talking about technology things here. Do you guys understand that? It's really as simple as that. You can hold on to things, or you can take profits and go back in again, as long, and because this crossover is just starting to happen, But when the percentage K, I believe that's a red line, starts to turn like that, okay, and this starts to move higher, then that is money in your pocket. You can hold on to things for a couple of days because things move really fast these days. Okay, so I'm not going to say a couple of weeks. Yeah, go ahead.
Yeah, and one thing that this particular chart doesn't show is that that inverted hammer also bounced off the 50-day moving average, which is really bullish too.
Oh, okay, yeah, because I don't really have moving averages on this one. Okay, that's great.
Yeah.
So that is that's very bullish, to be honest with you. And the other thing is, if you look at the MACD is actually holding out pretty fine, so it's good. So this is the thing for new traders, real simple. Every day you can just go in there, put in your, just ask me, the stows, just put the standard stows in. Go to investing.com and just add the stows, okay? If this is starting, it's going like this, stay long, period. Nothing, don't overthink. Next, this is your weekly chart. Like, hey, what's going to happen 2 weeks from now? I have no clue. In fact, the less clue you have, the better you'll do, honestly. All right? Because then you don't sit in a mindset like, oh my God, this is definitely going to happen. Well, it's not like that. It's not like that. But this is bullish, and it's bullish for a simple reason. Look what we did. I told you guys 2 webinars ago or more that once you hit, last one we talked about it, once you hit the upper Bollinger, this is the weekly chart, going back years sometimes, going back to 2019, 2018 when the chart was originally drawn, and I just keep on updating it a little bit. I don't change much on it, so it's important. So if you look at this chart, what does this pattern look like? Anyone? not Paul, someone else.
Bull flag?
Yeah, it's flag, exactly. It is, there's, inside the bull flag, there's some other positive events going on. Yes, exactly, sir. It's a bull flag. This is your ascending triangle, this line, and then blah, 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 blah. And you can take the blue line, and we broke out of the ascending triangle, right? We broke out of that in August. Then we shot up and hit the upper Bollinger. This is the wave. And once you hit the upper Bollinger and overshoot, you're bound to get selling. There's no question about it. There's no question about it. Doesn't mean every stock, there are other stocks that are going higher. I'm talking in general. The market will come under selling pressure. And that's exactly that happened. Now, the interesting part was that this was last week, that despite the blood red candle, the body of this candle remained within this bullish engulfing breakout of the previous week. Do you guys see what I'm talking about? You had the upper wick, like the top to bottom,
yeah.
Okay, the tails, but the body of the candle remained with, that's called an inside week. That's bullish. However, we slipped this week, right? So basically, this is this week, 9/7. Well, 9/7 was a holiday. No, what am I saying? 9/7 was a holiday. One second. Yeah. So we had. So yeah, this is this week. So basically, this week I consider to be also very positive. Now, can somebody look at it very quickly and tell me what happened here, which is very interesting and actually very constructive for the markets to bounce? Sure, just focus on this. Okay, I'll just tell you guys, okay? We don't want to spend all night here. See this gap? This gap was drawn weeks ago, if not months ago. And I said the market, if it really goes, it's going to hit this gap. Well, the market not only hit the gap, but went through it like, like butter. Boom. And then it went nuts. That's a SoftBank move. And of course, companies coming out with better earnings, blah, 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 all kinds of stuff. Fed Powell saying good things. He's obviously a big support behind the market and everything. All right. So now it came back, and look at this tail. And this is what technical analysis is all about. Technical analysis is not like, it's something that people have to get used to. But I try to keep it as simple as possible. Look at the tail. That tail hit that gap and bounced hard. So on the weekly, what's the shape of this candle, someone? What's the shape of this?
Hammer.
Hammer?
It's a hammer. It's a long tail. No, not inverted hammer. This is an inverted hammer. Like, you want to know what inverted hammer is? Get a hammer, not too heavy one, and just hold it over your head upside down, all right? Don't let it go, because then it's going to hit your head, you're going to pass out. But that's an inverted hammer when it's falling. Remember, that's the simplest way to remember it. Inverted hammer is when it's falling. It's bearish. It's a bearish signal. That's an inverted hammer. That is a hammer when you're actually holding a hammer, right? So that is a hammer, and it's a long tail hammer on the weekly. So this is a very positive sign. This is a very
and the week's not over.
Hopefully, the week's not over. And before you popped in, I explained the reasons, behind the whole, pull down on the market and stuff like that. Exactly, the week's not over. And these next 2 days, going into September 11th, if the bullish thesis plays out, that's where you get those 400 to 600 points or more. Because a lot will happen. It's a very fast-moving market. So saying all that, there's really nothing that crazy wrong. This is good. However, the MACDs are starting to, the stochastics are starting to kind of ease back a little bit. Nothing that alarming yet. The MACD is still very strong, so the underlying pillars are quite strong. So again, I'm not going to project that weeks and weeks. I'm simply saying that if this goes above, and my number is basically that on the weekly basis, if by next week we can capture 3450 on the S&P, give or take a few points, all right, then the market will have a fair shot to go and retest. 3450 is 52 points from here, roughly 400 to 500 points from here. If we get another 400 to 500 points and remain around there, 400 to 500 points on the Dow Jones, obviously, then we have a fair shot to attack the highs, but we don't know yet. Now, let's take a look at what's happening here on the NYMO. Oh, great, the ads disappeared. Isn't that beautiful? All right, so if you look at the NYMO, and this is an oscillator, the last time we did the webinar, the NYMO was somewhere around minus 35. And I said, that's, that's pretty good. And looks like, and we attempted to bounce off that on Friday, if you remember. But then we hit minus 68 yesterday, minus 68. Minus 68, minus 70, forget minus 138, that was the COVID-19 crash. Minus 70, minus 45, but anytime you're down here, see that? That's a buy, buy, buy. No question about it. Now, this has to continue higher. This has to obviously continue higher. And unless we get overbought up here somewhere, if it goes positive or goes like plus 10, again, the market will rinse, repeat. All right, but this is positive. And minus 68 simply means that a lot of things got washed out. The technical resets happen real fast. It puts some real fear of God in traders. And it should. That's what resets are all about. Resets are not about, oh, I'm really happy. No, resets are when you don't feel comfortable. And out of that discomfort, you're doing some strategic buying, not just BTFD, Robin Hood type of crap. Okay, I shouldn't be pissing on Robin Hood, but I'm just saying, the great traders there too, I'm sure. Okay, so this is not kid stuff. You don't do it buy the effing dip just because the market fell. You need to look at the technicals and make a decision. So far, I like this. This actually created a positive divergence. What do I mean by that? I don't want to explain that too fast. It was minus 50. We were all the way down here on the full stows. We went down to minus 70. In other words, the price function went down. Somebody please mute the mic, please. Thank you. In other words, the market fell harder, but the internals created a higher low. That's known as a positive divergence. I call it PD. Okay? Do you understand what I'm saying? The internals created a higher low, the full stows, for example, and the price went quite a bit lower. And this is from August. So that's it. Now, you guys, throw out some charts. Let's take a look at what's going on, what stocks you like, what you don't like, and
Oh, hey Frank, one last thing just on this page.
Sure.
I think this is pretty rare, but the weekly also has bottomed the same time as the daily, so that's a really good.
Let's see.
Yeah. On the stochastics, I'm looking at.
Yes. Okay, so wish I could make this bigger. Okay, on the stows, yes, double bottom. Yeah, that's definitely interesting. What I don't like is the falling MACD, which I mentioned last time. I'd like this to stabilize a little bit, but it really doesn't matter because even if the MACD is falling a little bit, this is technical stuff. It's nothing crazy, guys. The market can still move higher. So that's what I'm saying. I'm not saying take the market day by day. I'm simply saying just don't get overtly bullish, especially when there was some major technical damage that was done over the past 3 days. Let's not forget that. So looking at let's say, for example, we look at this chart here. This is your S&P 500, right? So what do? We went up. We fell below the 50-day. The 34-day moving average right there, the orange line. We almost came to the 50-day. That's why I said 3305. I mentioned in one of my tweets, like around 3300 max pullback. We didn't quite get there. What we got there on the futures. Remember I showed you the gap, guys? Yes, no? Just a few minutes ago?
Yeah.
Right? Now, futures, so it did the job. We actually hit the lower end of the gap because futures trade 24/7. S&P 500 doesn't, right? So it didn't have to come and test the 50-day moving average because the E-mini futures already did the job for it overnight. Do you guys understand what I just said?
Right. Yep.
Exactly. So then now we bounced off the 34-day moving average. What we would like to see, very simple. See the blue line here? It says 3430, 3431. We need for the S&P 500 to really go above the 20-day moving average to validate that it was simply a mini pullback instead of something bigger. If we fall harder again and test the 50-day, I can assure you we're going to break down below the 50-day, just like it's done a couple of times. Stay below that, scare the living daylights out of everybody, and then it's going to try to take back the 50-day. So now, is that possible? It sure is. And it could happen, I'm letting you know, by next week. The latter part of next, no, not latter part of next week, sometime around the 15th to 16th, because 18th is next week is monthly options expiration, so that's another kind of positive event, monthly options expiration. So it's going to be very interesting to see what happens. So watch this on your screens too, because if we break the 50-day, which is about 80 points lower from here, 85, that's about 600 points lower, then obviously there's going to be some damage done. Looking at it, we got very oversold. You can see that that's really oversold. All right, so it's doing its job. McClellan oscillator is looking great. Looks like a double bottom, right, Paul? Right there.
Yeah.
Looks like a major double bottom. Let me just try to do this right. Day. Telling you. Humans don't run the market, okay? Machines run the market. That's why these things are so important. So important. So last time we had a real dip was here. That was back on around June 26th. And right there, guess where it came? Take a look. There you go.
Yep.
So this once you get down to minus 200, minus 215 on the McClellan oscillator, you generally tend to have a multi-day bounce, and that's pretty much fits with my projections what I just said. Got it?
Yeah, and Frank, that stochastics mirrors the June, just like your symmetry comment there.
Right there. See that? The stochastics too. So the difference is, actually there's no difference. It's pretty much the same. So that's it. Now, let's talk stocks, guys. Who wants to see what? Big Mark.
ZNH.
Which one?
ZNH, China Southern Airlines.
Oh, okay. I thought it was Zimmer Holding. Hold on for 1 second.
Yep.
Okay, I'm back. Oh, one quick thing. Yeah, let's definitely take a look at that. I have no idea about that stock. We'll certainly take a look at it from a technical standpoint.
Okay.
One of the things that I do, which I'm sure a lot of you guys do too, if you have Thinkorswim or any other platform, is if I'm playing options and I want to see, I look at I basically and I know I can make these grids better, but I'll put like 4 charts on a grid, right? And I'm going to watch this because every one of these ticks, these are the 5 15-minute charts. See that? So every one of these ticks will move my options prices by 5, 6, 7, 8%. So you can do that too on your side. I'm sure many of you do and do it much better. But this is a very useful way. So the stocks that you're watching, let's say put on NVIDIA. Let's put in Square. That's the one I have right now. So this is not for long-term trading. This is for short-term trading that you're managing your profits intraday. So let's look at the 5 minutes. Let's look at the 15 minutes on thing. So the 15-minute chart will give me an idea, like, how it's acting, right? And stock is up about $2 after hours. It's not showing on this, obviously. So there you go. So, all right, Disney, Walmart. So these are very useful short-term charts if you're trying to manage your options profits. Remember, we can sit here all day long and talk about long-term forecasts and what's going to happen, like blah, 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 blah. But in reality, you need to just take down some profits on those options and make some serious money, right? Because honestly, Let's face facts. None of us know what's going to happen a month from now. None of us know what's going to happen 2 months from now. Yes, I can project on my charts and do this and that, but there are so many other factors, especially in a year like this year, election year, that are going to drive the markets and create massive volatility. None of us know. So if you want to capture some profits and stuff, you got to look at it, look things on a short-term, multi-day basis, intraday basis, and pull your profits down sooner than later. Do you understand what I just said? Did you guys understand, especially the new ones? Did you guys understand what I just said?
Yes.
Exactly. So you want me to take a look at ZMH?
No, ZNH.
So what is Z? This is Z is Z. What is Z? What's the symbol?
Oh, ZNH.
N as in Nancy.
Yeah.
Oh, okay. I was right about ZMH. I knew it was Zimmer Holding. That's why I was confused. Damn good looking chart here. So this is China Southern Airlines, and you've been a long-term holder of this, or recently, or what?
No, I was just looking at it today. I think
Okay.
someone on StockTwits was talking about it.
Well, certainly a very good looking chart, and thanks for bringing us to our attention.
Yeah.
I don't know how the options behave, whether they move or they kind of like stand still, but I'll certainly take a look at it. Well, this chart, honestly speaking, there's a gap here. See that gap? Let me just change that. It certainly is a very good looking chart, no question about it. Here's the gap. It is now entering the gap. So the next move, technically speaking, should be 34. And I'm sure those options, will deliver some very handsome returns. So I'm going to put this symbol down as one to do some work on tomorrow and maybe put it out as a suggestion. So good stuff. Who was this?
Oh, I asked about it.
Yeah, who's I?
Big Merc.
Okay, got it. Oh, got it, Mr. Merkins. All right. So there you go. Good looking chart. Gap fill, upper gap fill 34. You normally get some selling at the initial gap fill. So if it pulls back a little bit, 30 would be a great entry point. But the way from what it looks like, the size of this candle, look at the volume, heavy buying for the last 3 days. While we're tanking here, this one's like being bought like no one's business. And it's really moves. Good suggestion, and certainly worth a shot. Someone else, please.
Hey, Frank. This is Lucky. Can we
Yes.
look at AMC and then on the side, also a question about oils in the long range, such as Gush?
Oh, I used to trade those a long time ago. Now I don't. Yeah. Oil's like really tricky. AMC's chart, if you're looking at a long-term chart, AMC is obviously a huge beneficiary of the reopening. It's a reopening trade basically, and a lot of so I'm looking at AMC on a bullish side from a swing trade standpoint, another 50% higher, given that the economy opens up nicely, and there is no resurgence of COVID and stuff. So you could be looking at, on a short-term basis, basically the stock is between 7 and 8. So it's definitely a good buy point. I don't know. I'm sure the options are dirt cheap, right?
Yeah, they're pretty cheap. Yep.
Yeah, you can buy a bunch and keep it. It's a real company, and it's a real beneficiary of the reopening trade. Yeah, I like it. I don't on a longer term basis. Let's say 782 seems to be the top. We're not even going to go there. So yeah, and you got multiple supports. First support comes in at 541. First support comes in at 583. 589. See the rising 20-day. So this is definitely got the green light to be bought. Short term, let's see what it looks like. Yeah, nice.
Thank you.
Two great ideas. Awesome. And the calls, I'm sure, are cheap. You can buy a bunch and just leave it in there. Buy them for October or November, you know, and so you pass through the storm. So looks pretty damn good. All right, you wanted me to take a look at Gush?
Yeah, yep, thank you.
Let's see. Haven't seen that in a long time. Ooh.
Because I also saw Oxy was trading at about $11 today, and
Yeah,
I said, is it worth to go back into oil?
Yeah, I can't even chart this. Really, I can't even chart this because this if you look at it this way, this is a bear flag right there. That's a bear flag. I can look at it in one of my favorites is EOG, and EOG, Enron Oil and Gas, EOG Resources. So EOG as a chart that I can actually see. So EOG has floor at 40. It trades normally between 40 and 47. The calls really move. They have a lot of, implied volatility, gamma, and all that stuff. So they move nicely. So I like EOG a lot. So if you're going to play oil, definitely take a good look at EOG. Very oversold. And they have huge refining capacities, and all kinds of stuff. The analysts love this company because they're so well run. So this is the one that I would be looking at on a really bullish thing. I remember trading it like what was it, a month ago or a month and a half ago, and then the second trade didn't work out. It went from that 46. We got $6 on it just in a couple of days, and those calls really went. So EOG is my favorite. You want me to take a look at Oxy?
Yeah, just to see if it's actually worth.
Well, if you're gonna play,
yeah.
honestly, no, I don't particularly care about Oxy because you remember one thing, Occidental and stuff. These guys are really Occidental Petroleum, Exxon. These guys are really tied in with the actual price of oil, because that's what their main thing is: extraction and exploration and all that stuff. Companies like Enron Oil and Gas and stuff, they're less correlated with the actual price of oil. They're just playing the overall distribution, refining, all kinds of metrics within the US. You understand what I'm saying? So
good point. Yes, thank you.
I prefer that. That's why EOG is in my opinion better.
I'll definitely look into EOG. Thank you.
Yeah, try one or two of the calls. I'm telling you, and then you get an idea. Let's take a look at Apple here. Okay, this is really exciting. Why? Because it's Apple? Yeah, that's why. Just kidding. So why is it exciting? It's exciting because Apple got really oversold. Like, hello, like boom. I can still slip and slide a little bit. It does that. Got really oversold real fast. So that's number one. Number two, let me get this Fibonacci stuff out of the way so it cleans up the drawing. There we go. So a couple of things happening here which I like. So basically, Apple is exactly what the Qs did. You had an inverted hammer, and then you have a doji, a green doji on nice volume. So that's actually a very bullish pattern. It hit the 34-day moving average right there, and boom, went up like this today. So all Apple has to do is capture 121.68, and you got yourself 124 real fast, or even possibly 130. If Apple runs up hard into the event, which is the 15th, then I would be a net seller of the stock and then maybe keep a little bit. I mean, off the options. But Apple looks really good. Now, if I want to look at it like this is extra bullish, extra sauce. Okay, watch. I know I should never say this, but honestly, Apple, and in many cases Facebook, but let's stick with Apple for a minute. Apple is like the safest tech stock you can ever play because the company never does anything wrong. You understand what I'm saying? And it controls the market. So absolutely perfect. Here's your neckline. The neckline is 124. Stock's at 118.51, 119, $5 on Apple. Bang, you just made yourself some coin. And then if it breaks out, next move is this. See this where the where the roller coaster down came? Well, it could be a roller coaster up. And that would be my max price target short term on Apple, 133. See how defined the pattern is? You got a W pattern here. And once it breaks out over that 120 level, you're going to hit 124 real fast. Can it happen this week? I hope so. Whichever the case, you're still good to go. The calls are reasonable, and this is definitively the leading stock in the market. So, anyone else before we wrap up?
For Boeing, I got a lot of calls for next week. Please.
Yeah, Boeing's killing me, man. I mean, it's like
yeah, it's killing me too.
yeah, seriously, they won't let this stock go. I mean, every day there's like this or that. And then when it gets up, it's like you can't touch it. Then it does this, right? It just goes from 167 to 181, like boom, it just goes. It just drives me nuts. Boeing, basically, the longer term chart it's still the same. It's a cup and a handle. The floor is at 153. The roof or resistance is 191. But this is over multi days or maybe 2 weeks, whatever. On the shorter term basis, the stock actually recovered a bit. It hit 157 at 10 this morning, shot up to 162. Looks like it was starting to move higher, but then by 3 o'clock, the market started selling. So it basically closed at 161. Honestly speaking, it's very hard. I mean, let's put it this way. If you're a channel player and you look at channels, then you can say, hey, okay, I'm going to be a buyer on the bottom end. I'm going to be a seller on the top end. So that's the best way to look at it. So 157, 167, 157, 167, and 177. Boeing basically is a 10-point incremental mover, but honest to God, I wish I could give you a better answer. I mean, it's just like they just don't, if good news comes out the next day, something else. Like now they're investigating the Dreamliners. I'm like, oh God, here we go. So basically, it's a tough call. But I know one thing about Boeing, having traded this for a long time, is that all of a sudden you get this news about European certification of the 737s, which are in the works right now, and the stock will be up $15. So you got to be in there to get that $15 because when it pops, it's too hard to buy it. Right? So it's too late. So I'd rather kind of like hold on tight or do what you need to do, maybe reduce your position. But whichever the case, that's your floor. Your floor is 157 and your upside is 167 and 177. And if this crash hadn't happened, Boeing was at 180. It was looking great. And we had the 190 calls and boom. Nothing we can do. So that's the answer.
Thank you, Frank.
How about ABT?
ADT?
ABT, as in boy.
I like it. Abbott, they came out and the stock, this is all hedge fund play. I expected the stock to go to 120. Their stuff is real. So I tend to remain long with this stock. And the way I look at it on the daily chart, it got very oversold. You can see here. This is not always a day trading type of chart, but it's overall bouncing fine. I still expect the stock to get towards 110, 111. So that's my opinion from a swing trade perspective. On a intraday perspective, it's not really a day trading stock. You know what I'm saying? So it's more of a swing stock, but I like it. There's nothing wrong with it. There's nothing wrong with the chart. The company, the company's test kits and all that stuff, are fantastic. So there's nothing really in there to find fault from a news standpoint. So I like it, but it's a swing trade. It's not necessarily a day trade. And the calls are cheap. And I dollar cost averaged. So because it went from 108 to 102, so I bought here. I bought a little bit more today. So I'm okay with it. Any others? Mr. Ozan, are you a trader or are you just kind of learning? Okay, Ozan won't speak to us.
Frank,
anyone?
hey, can you
Yeah,
do
go.
Tesla?
Oh, geez. Tesla. Tesla is actually looking pretty damn good, but it's such a nutty stock. Okay, Tesla is actually technically perfect. It hit 50-day, turned around, created a nice hammer, almost took out the 368 level, actually hit there and then pulled back. If you see that, oversold. So if you're an aggressive trader, buy Tesla. If you can't handle the volatility, then never touch Tesla. Yeah, Tesla from a technical standpoint is a buy at this point. 1 second. Look at that. There. That's your range. So let's do this calculation. Left, 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 left. It's just the options are so frigging, well, options are a lot cheaper now. What am I saying? Okay, 271 to 260. That's 90 points, right? That's the depth of this channel is 90 points. Right, guys?
Yep.
Okay.
Yep.
So add 90 to 360. You arrive at 450. So is it definitively going to go to 450? I have no freaking idea, but I think the stock will hit has a good shot to hit the 397. So you got 30 points on it, or 428. I'm okay with Tesla for people who are aggressive traders. Absolutely. However, if Tesla breaks the 50-day moving average, let's say it falls for whatever reason, it falls 30 points, and it can do that just like that, right? Then Tesla is in danger of coming down to 272. It's going to just slice through 300 and possibly 276. I would love to buy Tesla at 267 again. Well, post-split. But for now, fast traders only. Fast traders can certainly buy Tesla. Next one, please. 9:51. Just got a couple of minutes. Shut this down at 10.
Frank, I got a bunch of Biogen up next week. Should I just dump it or should I hold on a little longer?
I have no idea. I really don't have an idea. I have a bunch of Biogen too, except they're like really cheap lottos. And if they go bust, then I'm going to lose a minimal amount of money, which I'm not going to like. But let me just clean this out. Biogen is not a charting stock. That's one thing I realized. Let's take all this out. Bingo. How does somebody chart this stuff? Yeah, I can draw all kinds of patterns and stuff. It's just moving. It's just lazing around the beach. Like, okay, I'll just run up one day, $50, stay with me or go away. We don't care. Honestly speaking, I have no idea. I have no idea. They could come out. Remember, it's the hardcore, solid, cash-rich biotech giant. Any day, any minute, I have no idea when, they might come out with an announcement for either their Alzheimer's or their MS or multiple sclerosis or all the other drugs on the pipeline. And the stock will just literally, just like it's done many, many times, literally jump up 20, 30 points. So to be honest with you, I actually have no idea. All I know is I buy, I just sit on it. And I just keep on buying the cheap calls. And if it works, it works. If it doesn't, I'll go back in again and buy and start doing the same thing. Because my experience with Biogen has been that the biggest money that has been made on Biogen while we made it, you had to be in there not knowing what news is going to pop going forward. Now, it's a biotech stock. They might come up with the news like, hey, their Alzheimer's thing didn't work. No, not true, because it's in the fast track FDA approval program. So obviously, the FDA is not going to fast track their clinical studies because they found a lot of holes in their, in their clinical trials. Obviously, they see something which is valid. So Biogen really is kind of like you either believe in it or you don't. It's not a chartable or type of stock.
Okay, thank you.
I mean, you could look at it on an hourly basis. Pops up, then the market fell. It fell hard, then came down, hit 268, 275. If somebody's trading stock, they can actually make some money. So people who have day trading accounts and stuff, you can try to trade the stock because here it's 7 points. 7 points from 268 to 275. 7 points from here, 274, same day type of trades, 276. So you can make 6, 7, 8 points if you're trading the stock. When it comes to the option, it's a different story. See that? Look at that. Got a bot here. Not this Tuesday, not the past Tuesday, Tuesday before. 1 week ago. Okay, you could have bought here 278, went to 288. So it's roughly 7 to 10 points at a clip. I might just trade some of the stock, for the hell of it. But so far, that's the way I look at Biogen. All right, anyone else? That's it, right? Okay, last look would be futures. This is what the futures look like. And so far, we're good to go. 1 hour got overbought, so now it's resetting. Hopefully the reset will happen before the US markets open. And we have a fair shot to, like I said, I explained it quite a few times today, to get up. We need to recapture back 34.05 and then 34.46. Right there, you're going to see a lot of selling. Right there. Standard procedure. All right. Everyone get some sleep. I'm pretty tired. Like I said, all those little things, silly words of wisdom. Just try to be as closely glued to the screens as possible. This is a very tricky market. I'm telling you right now, there was some serious technical damage done. Let's not take this lightly, all right? And technical damages, despite all the charts and the upside and everything that we show, takes a little bit of time to repair. It doesn't mean it'll take weeks, but sometimes it takes a couple of days. So if you have very short-dated options, then you have to decide whether to take that loss, move it out. That's all part of position management. There is no easy answer in this business, okay? Sometimes you got to bite that loss, make it up somewhere else. Lots of great ideas I put out there for you guys. And I don't want to bog people down with like 19 different suggestions during the day. So I'm being selective and looking at the ones that I like. And then of course you guys have come up with some great ideas, which themselves are good on their own. So that's it. Have a great evening. Get a lot of new people together. Mr. Ozan, the quiet one, join us as quickly as possible so you get to really understand and learn these markets in a way that you have never really understood before. That's one thing we can certainly assure you. Have a great evening, gentlemen. Ladies and gentlemen, good night. Thank you.
Thanks, Frank.